Sunday, May 21st, 11:36 a.m. New York time. To a broad market review of the past week, looking at the time frames, the weekly down to the daily. Start with the S&P 500 futures. Weekly candle closed green, made a higher high, higher low. Also broke above that prior week's inside candle, which was a small trading range. We closed inside this supply zone. The momentum to the upside is looking good here. We have that zone up here, supply zone, which also swing high. Let's go look at the daily time frame. Looking at the Friday close here, red. Yep, we closed red on top of a trend. Yeah, we made a higher high, higher low. We also closed inside that prior candle, just above midpoint. And we tested it. That's why I had that zone there for. Potential reversal. Not meaning a massive sell-off, but potential reversal. Use caution if you're going to be buying up here. I don't think I would be. I'm looking maybe short for a short swing trade. Short swing trade might be 2 days, 5 days. We have a midpoint down here too. If we reverse and break below, make a lower low, lower high, this would be a target area I'd be interested in seeing. So we have this massive consolidation here. Yeah, so it could be a simple retest. Also have a midpoint here, past that showed buyers. Let's look at this. Friday, red, higher high, higher low. Thursday, again, green, higher high, higher low. Wednesday, Monday, Tuesday. So Monday and Tuesday were small trading ranges. Also, both of them were still inside that range from that past Friday. That was the past Friday. Monday, inside candle, indecision. And then Tuesday, we broke below that inside candle, making a lower high, lower low. And then we had that reversal. Wednesday, which often happens. Sometimes you see that fake out in the middle of the week. Big move, broke above and closed above. All this consolidation, almost a bullish seller shut off and went higher, taking out that swing high. Nice trading opportunities. Notice this, that high there on the daily chart. That high here. You're going to see down here on the bottom left, the volume, the number of contracts when I hover over that day. That day had over 1,196,000. It took out this high here, 1,372,000. So you had this high here. You had a higher high, less volume. Then you had a high here, higher high, less volume. So less buyers buying on this new high. And then this new high, 1,617,000. We can look here too. First, that green one candle, 1,666,000. Yeah. So we took out this high, both these highs with more volume. More buyers stepped in here at the high. That's bullish. Again, we had that green, 1,666,000 there. So that new day, that red day, had less, but still bullish momentum. So if there was a retracement, or call it sell-off, I think it might be on weakness. And this is interesting here, that day, because that had massive volume, above average volume. But it makes sense. That was bullish because you had that big candle. We tested midpoint, buyers stepped in defending it. So again, I'm seeing that as more bullish stop hunt. Let's go look at some other financial instruments. Continue on. After the S&P 500, look at the 10-year yields. And this is the monthly chart, but I'm not going over that right now. Just the weekly and the daily. For the week, we broke above that supply zone. We tested this supply zone. Nice big green candle, extremely bullish. Higher yields, that's what this is. Higher yields, higher interest rates. Whatever nonsense you're hearing from talking heads giving their opinions, Charts don't lie, but they're certainly not including these charts. Yields are going higher. It's likelihood of the interest rates going higher until this changes. Not saying we're at the record high, just momentum has a high probability again that as of right now, interest rates, by looking at the chart price action, are expected to still go higher. For its inverse, we know the bonds go lower and yields go higher. Let's look at the daily. Here is Friday, higher high, higher low, tested this supply zone. So maybe we'll have a pause reversal. Okay, if we break through here, we can test midpoint here, go up here. Friday, Thursday, Wednesday, Tuesday, Monday, past Friday. We got all these higher highs. Strong like bull. Strong like bull. That was the yields. On to the next. The almighty US dollar. So the dollar broke above 0.382. That's a Fibonacci level. A little inside if you're not familiar with Fibonacci levels. 0.382, 0.618. I have them labeled 0.382 the green, 0.618 blue. Those are Fibonacci numbers. 50% is not a Fibonacci number, but I have it labeled because I want to know midpoint. So this trend, top there, we're already in a retracement mode and past the 0.382. Typically, when you pass and close past Fibonacci level, there's a higher probability goes to the next one. So the momentum to the upside has a higher probability we're going to test this 0.618. Stronger dollar, stronger stock market, weaker commodities, correlations. Look this up here. And then we're looking at the weekly here. Let's zoom out. There's a high probability. If we test this 0.618, that means that if we do a retest on the lower end, we should not break below here. Nope. And have a higher probability that we'll break above this swing high. Doesn't mean it's right off the bat. We might see go up, test the 0.618, do a consolidation, retest lower, not break here, and then go back up and break above here. Or we just continue going up. But I'm seeing there's a high probability we go in this area. Big impulse move down, midpoint. If you've been following me for a long time, you know these huge impulse moves down as well as up often have retracements, consolidation, then sell off. So there's much higher probability the US dollar is going up there. You have the daily chart. Friday closed an inside candle. Red was that high. Thursday was that high. So Friday inside candle. Friday, Thursday, Wednesday, Tuesday, Monday. Had a huge supply zone here. We finally broke above it Wednesday, which again, often that you see that Wednesdays is fake outs. So we had these days. Yeah, that was Wednesday, Tuesday, Monday. Tuesday, Monday, reverse, lower, lower, lower high. And then look at that, took off. Broke above that. Yep. You notice that too. I showed it on another one of these charts just before, also on the daily chart. And you had the Monday and Tuesdays that were fake outs of this past week, not all the time. Interesting correlation here. That was a dollar. Let's continue on looking at other currencies, the euro. And the euro is the largest currency weighted in US dollar index. Trades to the inverse. Look at the dollar. The euro broke below 0.618. Yeah, momentum down big. Closer to that 0.618. Take it to the daily. Friday closed green. And look where we closed. Made a lower low, lower high. Closed in the midpoint of that big impulse move down. We also closed above this swing point, which was a prior demand zone. Nice. So Friday and Thursday, Wednesday, Tuesday, Monday. Monday and Tuesday reversed to the retracement of that big impulse move down. And then that Tuesday, look at that, nice stop hunt. Big wick, small body, midpoint of there, nice stop hunt. Good opportunity to trade that reversal. Nice setup. So one could have ended short here. He broke below that red candle. Or if you want to wait longer, wait to break below that green candle for a nice bearish short. And rode it into that big impulse move down with a target here And you could have closed it for your gains, your profits. That was the euro. Let's go into the next. The pound. Second closed yellow inside candle. Very interesting. A lot of price action here. Zoom in. Yep. Still, this prior demand zone down here, buyers holding. Said it tested midpoint of that big candle. Above it, sold off. So leaning more bearish bias. But because it's an inside candle, that means indecision. Be interested to see how it's going to play out come this new week. Let's expand this out. Oops, let's do that right. Nope, good enough. Yeah. So it's not, like I say this, yeah, this consolidation here, selling off, but buyers are defending this. There's massive consolidation here. So the lower probability that's going to break down here, this might have a faster recovery than the euro. Let's look at the daily. Friday inside candle. Oops. I opened up the wrong chart. Shame on me. It's 403. There we go. The weekly. Lower low, lower high. Same thing like the euro. Testing. Just shy of the 0.618. Let's go to the daily. There we go. Already mentioned the daily. Let's go to the next. Oh, that was the euro. Struggle's real. Let's get back on track. The pound. Okay, that's what we want, the pound. The pound weekly. It didn't do a strong retracement yet. Made a lower low, lower low, lower high, closed red in this demand zone of buyers. So it hasn't tested the 0.618. Like I mentioned, it's stronger than the euro. And then on the daily chart, we already discussed that. Okay, let's go to the Australian dollar now. There we go. Remember, Australia, Canada, New Zealand, they're heavy weighted on commodities. So a weaker gold, weaker oil, silver, copper, natural gas hurts their currencies much more than it hurts the European currencies, such as the pound, the euros, the franc. So the weekly candle closed green, but higher, lower high, lower low, small trading range. Dodgy, potential reversal. Again, dodgies mean indecision, but sometimes inside trends are potential reversals. So if gold, the metals, the energies continue selling off, this has a higher probability going lower, maybe all the way down here. Let's look at the daily. They closed green Friday, went up and tested again. This supply zone themselves and rejected it. It's in a sweet spot here. So massive consolidation, less trending. Again, Friday, Thursday, Wednesday, Tuesday, Monday. Had that massive consolidation here from that Friday, Monday, Tuesday. Right below it, another consolidation. What's it doing? Staircase pattern, lower low. Let's go to the Canadian dollar, North American currency. Yeah, for the weekly, green, but lower high, lower low. Still sitting at this tight consolidation. Big difference. So again, we saw the European euro trending. This is more of a consolidation. And the daily chart. Look at that. Just massive consolidation here. All right, let's go look at the metals, the commodities. Biggest energy commodity, crude oil. Daily chart. Weekly chart. Closed green. So it made a lower high, lower low, broke below that inside candle, but didn't sell off. Nope, people are still bullish. Yep, still bullish. So the swing trade I had, the bullish swing trade I had on crude oil, I closed Friday for profits. Yep. That was a nice trade I shared. Here's the daily. Closed red on Friday. Midpoint, big red candle, tested several times. Sellers were stepping in there. Thursday was the inside candle, indecision, but it traded both directions. Wednesday, huge impulse move up. So again, Wednesday, a lot of positive news came out to push things higher. And that Tuesday, that Monday, a tight consolidation. And let's go look at gold. There we go. So I also closed my gold trade. I closed it Wednesday or Thursday. I definitely closed it somewhere in the middle of the week, but I closed it as a loser because I was trading bullish and I lost on it. I chose to close it because I didn't want to take any more pain. Good money management. Yep. So Friday on the weekly chart, red, lower high, lower low, broke below that inside candle, which was, look at that, all these wicks on tops. Yeah. And then it tested this demand zone, broke below it, and closed back inside of it. And prior buyer stepped in here. But my money management told me just again, close the trade. Take a small loss, which I did. Thank goodness it was a small loss. Again, stronger dollar, stronger stock index, weaker gold. The daily chart, Friday, inside candle, indecision. Oh, that'd be funny if this, yeah, look at that. Massive demand zone of buyers. That's where sitting in there. Some buyers testing in there, but the momentum's to the downside. I'm not going to be buying here. Nope. I'll be sitting on hands, see how things play out. We could have a retracement here. It might be up on weakness, but for a swing trade, it doesn't interest me right now. No, because again, it could be a fake out and just do a consolidation and a fast move down. All right, so now we'll go into the day trade on the financial instruments on the 4 hour, 1 hour, 15 minutes. See where the best day trades were on the major financial instruments I want to discuss. Be the S&P 500.